Now, I could totally understand why some of you guys hear my $900 price target on Tesla by the end of this year and say, who the hell is this guy to make that claim? Although in 2024, I was talking about Tesla, $450 stock by the end of this year, and that did happen. Sounded crazy when the stock was $150, $160, where I was aggressively buying the dip. This feels like a similar opportunity, and I do have to say, F the haters. That's kind of the bottom line. If you don't agree with me, that's fine. I understand that. But here in this video, I have two clips from two different hedge fund managers that are, well, one's an analyst, other's a hedge fund manager. The analyst is Dan Ives, one of the best analysts in the entire world. And I think they really give it to you straight. And I have to say, I agree with both of the things that they say. And really, I think if you are bearish on Tesla right now, you're probably ignoring all of the positives. In fact, you have to be ignoring the positives. Take a listen.
If you look back and say, when has it made sense to buy the stock? It was when Elon Musk was sleeping on the factory floor. It was when he was selling shares to buy Twitter. And I think this will again be a time when you say, it made sense to step in and add to holdings. We trimmed early this year. We wanted to wait for a new tax year because we had such large gains in the stock. And I think if it continues to show weakness, we'll be buying. And the last thing I'll say is the reason for that is we do not think this is an EV company anymore. We think it's an energy company. So battery storage grew over 100% last quarter, over 50% the previous quarter. We think that it's an AI company. So full self-driving in the US is likely to be a reality soon enough. He's saying middle of the year, which probably means end of the year. But we think you want to own this stock for the long term and use the volatility to step in and buy at more attractive levels.
Nancy, at what level is it a buy?
Hi, Shauna. So I think look, this is not a company that trades on valuation. It's a company that trades on the story. So if you believe in the AI story and you get a pullback of 30 to 40%, then I think you add to holdings and you just have to be disciplined. So I would say here is an opportunity to add to holdings. If we get additional pullback, I would say that would be an opportunity to add to holdings. We have not thought this was an EV company for over a year because what Elon did with EVs was he cut his own margins to drive his competitors out of business. He did a pretty good job of it in the US with Ford struggling in the EV space. And so we expect to see margins improve. We expect to see the cheaper model. Cybercab is likely on the horizon. And then, of course, my home healthcare solution for my old age is Optimus the robot. And I think that is being underestimated in the valuation.
Dan Ives here that says there is a massive period of growth ahead for Tesla. He has a $650 bull case price target this year for Tesla stock.
Tesla down over 11% since the start of the year. Despite the uncertainty ahead, Dan Ives of Wedbush reiterating his overweight rating on the stock. Dan joined us now for more. Dan, welcome to the program, sir. Lots to get through. That name is up in the pre-market just a little bit, but it's had a struggle recently. What is behind that struggle, Dan?
I mean, look, I think it's really the worries about distraction with Doge, as well as maybe some softer numbers that have come out of China, and as well as Europe, right? So I think there's worries about distraction. The Musk, is there brand deterioration? But look, we strongly disagree. I mean, I believe it's going to be known as a bet for the ages in terms of Musk on Trump. And when it comes to autonomous, that's worth $1 trillion. That continues to be the golden goose. That's what they're focused on. So I think any of this is sort of near-term noise into just what's going to be a massive period of growth for Tesla.
Well, it's not all noise. So let's get to some of the signal. Talk to me about the challenge to autonomous driving, the challenge posed not just from, say, Waymo, but also from BYD. How strong is that challenge?
Look, it's a challenge, but I think the biggest issue is that in the U.S. there's really no federal roadmap. I mean, the whole point here and why it was so bullish in terms of Trump and Musk, ultimately, this is now going to lay out on the federal side a roadmap for autonomous. Now, look, there are challenges. You look at what's happened in China as well. But I think that's something that ultimately Tesla is going to be massively competitive when it comes to everything in China. That's going to be a huge, strong market for them. And there's nothing that makes me view this as a zero-sum game. I mean, we're in the beginning of what's going to really be, trillions of dollars spent.
But let's just say, and this might be a hypothetical and this might be real, Dan, that BYD gets subsidized by the Chinese government in order to make enough inroads that they can offer cheap data and cheap technology that achieves some of what Elon Musk is promising, but a much lower price point. Why wouldn't that cannibalize from his potential demand significantly in one of the biggest markets?
Yeah, look, is that a headwind? Yeah, no doubt. I mean, is there some cannibalization? But I think it just comes down to they produce the best product out there. I mean, when it comes to their cars, in terms of Tesla, and it comes to ultimately what they're going to have when it comes to autonomous, that's a brand that's, I think, going to go through all that noise. And I think they're going to continue to ultimately gain share in China. And I think when I look at the U.S., despite some of maybe contained brand issues, when I look at autonomous and robotics, I mean, that's 90% of the story going forward. So any of this near-term worries, I think the bar's going to be a lot worse than a bite in terms of where just this broader innovation's going. I believe the best is ahead for Tesla, not in the rearview mirror.
contained brand issues is the most interesting way of saying that people don't like Elon Musk. There are a number of people who love him and there are a number of people who hate him. He's very much in the public sentiment. How much can you dismiss that at a time where you have Oppenheimer analysts coming out, Stifel also saying that, frankly, the negative downturn in consumers' perception of Elon Musk could result in a headwind for sales? Why is that just a contend perception risk?
Well, first of all, the haters always hate, right? So, I mean, they're always going to grab onto something that ultimately will be negative for Tesla. When I look at ultimate numbers, I mean, I think it's contained. And look, will there be some brand deterioration here? There could be some. But the reality is that the reason it's going to be known as the bet for the ages, because Musk having that front row seat in the Trump White House is significant in terms of autonomous, deregulatory environment. And that's the key. So any like small brand issues, which I believe are contained, it's still what I view as far and away, and it's not even close, the best EV and one of the best, really, automobiles in the world.
Dan, who's running Tesla?
Look, Musk continues to run. And look, and we talk about it a lot on the show. I mean, even if you go back a few years ago in terms of everything with X and Twitter and some of the distractions, I actually think this is an engaged Musk behind the scenes in terms of Tesla. There is a much stronger bench today.
Dan, how does he have time for that? I've got to jump in. How does he make the time to do that? That's amazing. Where does that time come from?
Look, well, first off, he definitely has a lot more, what I view as a bench at Tesla to run a lot of these projects. So maybe a few years ago, he was sort of doing it all, I wouldn't say himself, but I think now there's a lot more, activity that goes on without him. That said, most of the innovation that's coming to Tesla over the next 6 to 9 months, there's so much more innovation coming ahead than behind, and Musk is going to be key to driving that. Now, look, with Doge, is that a distraction? Is that going to cause definitely some negative brand issues? Yeah, it could. But the reality is, in terms of the benefits, far outweigh any of the negatives for the broader Tesla story.
And I think that is exactly it. When we look back by the end of this year, when Tesla's a $900 stock, in my personal opinion, obviously I'm not a financial advisor, I'm not a financial planner, anything can happen. There's some things that kind of need to happen for $900. I think Tesla needs to execute with their plan. That's bottom line. If Tesla does not execute, it will not be a $900 stock. You need to see Doge and the government continue to make efforts, as they have been, to drive down 10-year treasury yields. If Trump and Elon somehow grow astray and have different views at some point this year, and the cutback in government spending stops, 10-year treasury yields are not going to fall as much, and we are going to see, not a super great outcome for markets. Okay. Are these things likely though? I don't think so. So when the stock's $900 by the end of this year, in my opinion, again, not a financial advisor, contact one if you're lost here. We're gonna say this was a buying opportunity. And every time in the past that there has been these concerns about Elon Musk, not at Tesla, brand destruction. I mean, come on now. This is not the first time we've heard about brand destruction. One of the good old guys that used to be bullish on Tesla, Ross Gerber himself, made that argument in 2022 and 2023 that Elon was causing this brand destruction. That never happened. Tesla continued to at least meet their guidance, okay? Tesla said last year they were going to be positive in growth, but not by much. And they basically met that. I believe they were what appears to be slightly negative on the year, but for the most part met their guidance. And I think that's kind of getting lost here. When Tesla says something and commits to something, you should pay attention. Now, question is, how does the markets reward that? Again, where are markets at in the cycle? And I believe this is early innings for physical AI, for software AI. Semiconductors, yeah, that might be overplayed, overblown at this point. Sure, is there going to be gains there long term? Of course. But the 10Xers, NVIDIA is not going to 10X. It's going to take a very long time, very, very, very long time for that to happen, if it happens at all. Tesla? Yeah, you could easily see a 10x in Tesla, I believe, before NVIDIA. And that, I think, is some of the appeal around Tesla, obviously. But long story short, without going on too far here, this is, I believe, a buying opportunity. It is being reported today that Apple and Meta are both now reportedly planning to ramp up development on humanoid robots, joining Magnificent Seven names like Tesla, Amazon, and NVIDIA. But Again, let's just kind of be honest here. I think Tesla's by far going to win in this field. It's kind of like EVs, right? You can make a good product, and one would say Rivian has a great product, but can you manufacture that at scale? Can you stay alive long enough to see your product become mainstream? You know, that's kind of the difficult part with this. And it doesn't look like likely anyone is going to be able to hold a candle to Tesla. Now, also worth knowing that in the near term, the final 2 weeks of February are usually the worst period for the S&P since 1928 and the third worst since 1950. With monthly OPEX ahead, if history holds true, nothing is concerning and dip buying rewarded in March. If not, bears turn bulls rapido. Okay. One of the worst periods for markets, second half of February, the worst, in fact, historically. You're down almost 1%. The good news is, after the second half of February, the first half of March is one of the better periods of the year. Second half of March is not terrible. It's like nothing is the average return. So it's not great, not bad. But once you really get into April is the third best, or at least the first half of April is the third best first half, again, since 1928. So really, you get through the second half of February. First half of March is historically pretty good. Second half of March is okay, not terrible, not good. And then April, you really kick off some of that buying yet again. And I do think by April, we could have a pretty favorable dynamic in markets where the economy starts to weaken around the fringes, and you see the Fed take more of a dovish stance, a dovish approach. Now, you could also see the end of quantitative tightening pretty soon, because some of your bond auctions have really just started to come in low, like even the reverse repo market. It's now down to 58.77 billion. The Fed says themselves they want to stop this before it gets too low, where they start to run out of ample reserves, and you're getting down to some of the lowest levels you have been at, in many years, and you're kind of down to that point where quantitative tightening may start to come to an end. And that will be a positive catalyst for markets, as well as the Fed changing their stance on essentially, being hawkish or on wait and see. For anyone that does not know what quantitative tightening is, quantitative easing is when the Fed goes out and they buy treasuries to push down the yields. Quantitative tightening is where the Fed is selling treasuries or letting them run off their balance sheet in order to keep rates a little bit higher and really just reduce their balance sheet. That's the goal, but the byproduct is rates stay higher. There's this kind of a selling pressure on the bond market, if you will. As the Fed winds this down, which they have reduced their balance sheet $2 trillion in the past couple of years since the high, right after COVID in 2021 and early 2022, $2 trillion has been, essentially sucked out of this market. That is, I believe, going to start to come to an end, at least in April, if not in March. Just depends how these numbers really pan out. At the same time, you're probably going to start to see some real disinflation, again, some weakness around the edges in the economy, which could come together and be very favorable for Tesla. We have to remember, Tesla is an interest rate sensitive company. So rates come down, easier to get an auto loan. That business should start to do even better. Tesla's 20-30% delivery growth guidance for this year should be met. I believe the Model Y is going to have a lot more demand than expected. And even with some of this backlash around the Tesla brand recently, I reported that in the video earlier today, it's kind of lowering expectations for Tesla, okay, for Tesla sales. And when we realize the Model Y is selling really good, I think that's going to be a big positive for Tesla stock. Last we knew there was like 200,000 pre-orders in China. We have no idea what the actual numbers are or what the actual numbers are in the US either. But I do see a path ahead that is very bullish for Tesla, really over the next couple of months. Now, in the near term, Tesla could fall a bit. You want to watch this 100-day moving average on the downside, about $338 per share. If we do see some material weakness ahead, bad news or whatever it is, $300 is a good level to be watching as psychological support. Your 200-day moving average is down here to $272 per share. You don't always hit your 200-day moving average during, falls, right? Sometimes you do, sometimes you don't. Like here, you didn't hit it. And there's a lot of examples of this. But $272 per share, if we fall any further from here, it is a, sell your kidney kind of moment. Now, I said that when Tesla was $160 per share in 2023. And when Tesla briefly fell to $138, I was buying a shit ton of shares. And at this time, I said Tesla would close this year, 2024 at the time, at all-time highs. Between all-time highs, $414 and $450. Sure as shit, I was wrong. Tesla hit $488 by the end of 2024. And that prediction sounded crazy. Just sounded absolutely ridiculous. In fact, it was true. And I do acknowledge my latest price prediction sounds crazy. And I could be wrong. But if I'm right again, it's going to look crazy. It's going to sound crazy. That's almost a 3x from here. But I do think it will happen. And again, I will just point out, we have the smallest short position on Tesla stock in Tesla's history. Hedge funds and institutions are more bullish on Tesla, in other words, now than they have been forever. They've never been more bullish than they are today. We have Goldman Sachs. We have Charles Schwab. We have Stanley Druckenmiller. We have Vanguard and I say BlackRock. We have all of these funds going out and buying tens of millions or hundreds of millions of dollars or billions of dollars in the case of Vanguard and BlackRock in Tesla shares just last quarter alone. And I think there's a reason for this. I think there's a reason the short interest is at the lowest it's ever been, because hedge funds and institutions are buying. And that's exactly what I am doing as well. Now, if you guys want to go check out the link down below in the description of this video for the trading community, check that out. We have a newswire over there. Unfortunately, spent a lot of money for that. Twitter changed kind of the landscape there. So we do have a newswire down there, and I will be providing my portfolio there and the long-term picks that I have, not just Tesla, and my price targets for them, analysis, and all the research that you would ever need to know for at least the names that I own. You can come ask questions, all of that. I do trade as well. I send out alerts in that community when there is opportunities. Obviously not a financial recommendation. You could lose money. You could lose all your money if you just blindly follow someone else's trades. But I do tend to do pretty well over there as well. So if you guys want to join that, check it out. Link down below in the description of this video. That is it. Have a fantastic rest of your day, and I will see you in the next one.